as we are looking at the introduction to Forex chart. So this is the line chart, this is the candlestick, this is the bar chart. Those are the three that is used to analyze markets. We have open, the higher, lower, and the close. We'll see in the line chart here, this bar chart that we have presently. See the high and see the close. Depend on the open. Let's take this one for example now. This is the bullish candle from the former candle pattern.
Just use the candle.
I will use the candle. I just want to explain. I just want to. This is the low of this candle. This is the opening, and this is the high. The high. This is the close. So let's now go back to the candle to explain further. You can see the open and close of it. So the reason that majority of people prefer the candle is because it's more detailed and it's easy to identify the candle formation. We have different numbers and they are formed in different ways and they are all useful. So when you look at this white one, you see the body, the tail, up and down. Some people call it wicks, W-I-C-K. So they are all explaining something to you, how market is operating at the moment. So if, for example, now we look at this today's behavior of the candle, we look at the strategic place we put our horizontal line at the strategic level. This is the strategic level. So it gives us information about the day's movement of the candle. So from here, we have idea of what Euro JPY is doing. This is Euro JPY. That the midnight, when the season market opened, this is the highest it was able to achieve. So from here you see 3 o'clock, it started going down until it got to 7 of the charts, because this time here, this 7 here, if you look at this 13:55, is 1 hour ahead of our place here. So which means this 7 o'clock you are looking is 8 o'clock. Yeah. So from here now you can see that it moved from here when after the season is ramping up around 7 to close, and another market is planning to open, which is euro. So, and this is the movement so far. And now the market we are waiting for is the New York opening. So from here you can determine whether this is the pullback, that is, the market is pulled back to continue bullish, or it will go down. It depends on what the market. But if you look at the past incident, you can decide that this movement may little bit pull back to this level and continue uptrend because of the formation you can see here in 1 hour time frame. You don't only use 1 hour time frame if you want to trade in the lower time frame. This is just the basic, just giving you an insight of what is going on in the market. So So from this information, we see the movement of the candle. God's willing, we still look at the candle, the because we have different candle formation. So we're going to see how it's going to help us successfully in this market. But this is just introduction to the chart. So here, this is if you scroll the chart to the end, you you want to move the candle backward, you disable this shift. From there you can move the candle easily. But if you did not disable the two, you will not be able to. It's like a peg that peg the movement. But once you disable the two, you can look at the back history. You want to back test a strategy. This is the way you look at it. That strategy you have placed there, you can now begin to look at the movement, how it obey that particular strategy. So we don't have most things here on the chart. But let me just try as we move on. Let's enable it back, and so that all this, what you need majorly is how to enter the market, and how to put your buy or sell based on what you have analyzed. In this market, you must have rules to follow, and these rules are prone to changes, in the sense that if it's not working for you, you look at which one works for you. But you can't change your rules until you are able to take certain number of trades to see how it works and how it does not work. From there, you know that you have to adjust and amend some changes so that it will suit you in this market. All the strategies are they are all there, but the candle, the movement, the structure, the market makers, they determine the market. So you are not the one that determines the market. Not your strategy that determines the market. The candle formation, which is the price action. You can see that will take us to the price action trading analysis. You have your own area of specialization as time goes on, so you're growing this market. But when we say price action trading analysis, there are some things we cannot put aside. We have to take it in a simple way. You have to start in the basis. So price action, there's a way to apply it, and we must know what price action is all about. So before we can apply it. Now, if you look at this at 1 hour and you see this candle formation, the body is small and the day is long. We call it, some people call it inverse payback. Inverse payback. The opposite of it, when it is up, when just like this one now, the body is up and the tail is down. So payback. But the opposite of it, turn it upside down, say inverse payback. So here it's got to, if you bring your horizontal line, you get the resistance. Say, let me mark the resistance level. You place it at the body of the candle of the previous and the present. It's not the tail you are after. This is an information that this thing, seller are here.
The tail actually does.
The tail is telling us that the seller take up the market from the buyer. After much struggling, the seller conquered, and it is very formed. And you cannot see how the market sellers fought the level. Look at the level. Crossbar. Let you take the crossbar, you measure it from here down. You see how the market behaves. And look at the profit. If one able to spot it at that appropriate time, you can see the number of bars, 14 bars here. You can see the point 124. You can see how it moves. And that can be a profit for someone. So that is where this only candle, despite this was bullish, the seller came in and they conquered, and that changed. If you now go to the 4 hours to look at that particular, let's go to that 1 hour so that I put this draw vertical line there. Let's draw vertical line and look at how it now look like in 4 hours. Look at it. Combination of this. He swallowed this bullish. So, and this showing that is a respected resistance because this anytime there's a breakout, it will be very strong breakout. Look at this bearish, very strong. Look at this area now. So if we disable this particular scrolling, we can go back to the history. Look at where it was respected. And so these are the things that give us edge in the market, give us information about not our resistance line that give us, but the back incident, the back history that we're able to look at. At this also period, it's acted like this, it's formed like this. Then you now say, okay, my stop loss. Where will I take my stop loss? Okay, let me check daily time frame now. When you check daily time frame, you can see that throughout that day, it was very because it's a continuation of this down trend after this consolidation. After the you can see that it's consolidate for the time before it now move down. So from here now, today you can see this candle for today is going upward because it has respected this support level. This is support because the candle is up, and this is resistance as we said earlier. That is all. From there, you're able to, if you look at it daily give you more information better than to know what is happening. If you look at all these places now, there was a lot of consolidation, though it moved up and down, but if you put your candle up and down, you see that it gave you a consolidation period. Eventually break out from here and reach here. Another range, we call it consolidation or range. Another consolidation is breaking down. But this one now, we cannot determine what it will be. Either it will be continuation upward or downward. The market maker will determine that. When the New York open now, either it will still come down. But this bearish shows that the sellers are in the market. Once you play safely, once you play gently. So if you buy lower time frame, you leave the market, or you continue selling from here and take your profit and put your stop loss in a strategic place. But if you see that the profit is small than the stop loss, you leave the market. Another place is there for you to trade on, and you don't force yourself on the market. You let the market come to your side. So that is all about. We see talk more price action. This is just introduction. This is just basis for the beginner to master. So any questions so far before we move on? No. Now, what is a forex trading strategy? What is a forex trading strategy? There are many different forex trading strategies.
Don't go there still looking for money. You never had.
So, there are many different forex trading strategies. However, there are some basics of reading a price chart that you need to know before you can move on to learning any one strategy in depth. So let's cover the basic building block of trading the forex market on the technical analysis approach. The other time I talk about technical analysis approach, and I talk about fundamental analysis also. So let's start from the technical analysis, which I have already started, pointing to the resistance and support. So we start from there and we look at what happened. Most times I always, for better understanding, change the color of my support, so that this is how to change the color. You select and you right click and you click properties, you come to style, change to blue, so that when you are doing back testing, you will know the color, so that it will not mix up with other ones. and I don't take much line or the total line. I take three or four. But as you are starting, you get better because you are looking at it horizontally. You are looking at it in a unique manner, and such approach helps a lot. So when we talk of technical analysis, we talk of using these resistance and support, and look at how it formed, what's the market, the behavior, and how it's eventually result uh, to the probability that it gives you. So it's part of what you that will form your trading plan, trading rules. You say, oh, this is my plan. If I see this and this is number one. I want to see the market on the uptrend. We have uptrend. This is uptrend. This is uptrend. From here is uptrend. Now this is downtrend. So this is ranging or consolidation. So all the market we must be able to know how to trade them. You must not say, I'm for trend, uptrend only. I'm for downtrend only. No, no. You must master all so that you're able to make good profits.
Okay, uptrend. This one is consolidation. Yes.
Yes. Let me do it properly so that I can get it. This is consolidation. I watch toward the body. So don't worry, but just get the perfect. Just like law, just like physics, when you are drawing your graph, you take the three perfect lines of the points join together. So this is all what happened here is before this big candle, this particular bullish candle, and government now take over. So anyone that trend this market now, they make a lot of profit. When you see this one, so that it's continuity and move on like that. So you can enter here, you can enter here, but it's better to wait for the market. And if your buying limit is not hit, don't worry, more opportunity are coming. So just wait.
So like if you enter here now, like what will you say to make profit here?
Yes, yeah. That is if you are using
Okay,
time frame,
okay,
daily time
okay,
frame.
today.
Yes, but if it is just copy, or if it's just uh, daily candle time frame, your result may not be that particular day, maybe 3 4 days. If it is 4 hour time frame, the same way. But when you talk of 15 minutes, you can see all what we've done in the daily time frame, but analyze the market from the higher time frame. Look at the whole sum, what market is saying before you enter it. It helps a lot. So any other question before?
So which one is better? Is it the 15 minutes or 1 day?
It depends on the time. You look at your own time. That's why you plan. That's why you must have a plan. If you know that time is only on your side, you can go for the 15 minutes, 5 minutes. Or if you know the time is not only on your side, you can start from 1 hour time frame, 10 minutes, 30 minutes, leave the market to run and see the end of it. That's it. Just study the market and know which one suits you. Don't forget, we have different approach to this technical analysis. So you can